Hello, hello, hello. Hello, guys, and welcome to the 50-second trading opportunities webinar. This is your host, Nirav. And while I set up the stuff and test the audio and everything, you guys kindly let me know in the comments if you are able to hear my voice as well as the screen. How's it? Mic test, mic test. Hello, 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 hello. Mic test, mic test. Hey, so it looks like it's working fine, and I can also see the comments in the chat. Chal is saying, "Hi Nirav, are you doing well?" Yes, Chal, I am doing very well. How are you doing? All okay here. Yeah, first of all, Fraser, thank you for being our first member of the YouTube membership, which I have recently launched. And good morning, Philippe. Good to know, Charles. And yeah, I forgot to say good morning, good afternoon, and good evening, depending upon the time zones you guys are in. And before we move any further, let me just quickly get done with the legal disclaimer here. So guys, here's the legal disclaimer suggesting all content presented here is purely for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here for your trading, your investing, or for any other purpose, you yourselves will be liable for your profit, your loss, or loss of profit. The rest of the content you can read by yourselves. Now, let me give you a very, very quick introduction. And this is only for the people who are joining in for the first time or watching this recording for the first time. My name is, as you guys already know, Nirav, and I'm the admin and owner of 50 Eyes Market Analysis, which is the website where I have been publishing my views on the markets since 7+ years now, right? And this is the YouTube channel 50 Eyes Market Analysis, where this broadcast is currently going live, as well as on our LinkedIn profile. If you want to join these webinars, we are currently conducting them on Monday, Wednesday, and Friday at 2 p.m. GMT. Right, so you can join in. If you also like the content, then I like to bring your attention to the fact that we have just recently launched the join function, or what do you call, membership via the YouTube platform. And if you want to support the work and see more of it, basically if you have in one way or another benefited from the content I'm sharing, then I request you join the membership. You will have to log in, and you should have a account connected, basically a payment method connected to join it, right? So far since the launch, I have not seen as good as a response as I was expecting. A lot of you people were saying that launch it and we will join in, but only a very, very small amount of people I have seen. So not much I can do about it other than talk about it. So we'll see how it goes for upcoming webinars. If I see the good response, we'll continue doing them. Otherwise, you know how things end. Everything, every effort I make should have something in return. If not, then there's not much point in continuing them. So anyways, that's about it. And lastly, the most important thing, this is the forecast accuracy, which I like to show up before we actually dive into the webinars. For the last 6 years, we have consecutively had 80% plus accuracy. And what does this accuracy even mean? So the thing is that just like I'm conducting this webinar, previous webinars with their dates and the instruments discussed were conducted. This was the analysis, and this was the outcome. Every time we had a outcome as expected, we give it a +1. If not, then -1. So we have what do you call, compiled this record like this: 82.22% accuracy in 2021, and 2020 we have an accuracy of 88.52. So on so forth. 2019 84.88, 2018 84.61, 17 87.5, and 16 83.34. So this is the way we have been conducting these what do you call, webinars and compiling a record. And the reason I show it is because This is industry leading. Generally, when a 60% accuracy is considered very high, so this is beyond exceptional or considered rare. And the fact that it's public is basically means that anybody can check it at any point in time. So that's about it for my introduction. Now let's head over to actual webinar. And the way we will conduct the webinar is basically the same. We will first of all go over the instruments EUROCAD, EURUSD, EURCAD, USDJPY, EURJPY, crude, gold, S&P Nifty, and lastly we'll check out Bitcoin. And yeah, for those of you who are solely into the NSE markets or NSE instruments, I'll just like to let you guys know that we are planning a project specifically for Nifty and some NSE stocks we'll look to cover on much regular basis, and hence we are looking to or planning to remove Nifty from this current list. Further details, just stay subscribed to the emailing list I have and the Twitter handle. But yeah, emailing list is definitely more important because some announcements I only make on emails. So you can do that by going to 50eyes.com/subscribe emailing list, right? And that way you can remain connected with me and remain updated on the upcoming things. So that's about it for what do you call the introduction. Now let's head over to our actual discussions. And first of all, on screen, we have the chart of Euro USD. Euro USD, as we discussed last time, we were expecting something like a downward movement from this point, which is around the price level of 1.0667. So this is basically the upper part of the resistance box. This is where we were expecting the market reversing to the downside, right? However, we did not see anything of that sort. And the conservative setup was that once you see a break below this red channel, we will be more interested in selling this market. We again have not seen that yet. So it never really triggered our shorts with the risk people who are taking more risky trades. For them, the shorts were very much triggered, but the conservative shorts never got triggered so far. So let's see now what this market is really doing. Well, let me remove the text 1 second. So what this market is really doing is it is either going up for a wave two or it is doing something else. How would it go up for a wave two? So as we have already discussed that we are considering a nested 1-2-1-2 formation. So if we forget about everything and just focus here, then this will be 1 second. So if we forget about the past or the what do you call higher time frame point of reference and look at things from the shorter time frame perspective, what we find is that previously we were assuming that the wave 2 is here. If we assume that the 2 is still continuing, then we can consider this as our A, this as our B as a flat structure, and this as a possible continuation for a C. Right now, again, I'm not very pleased with this structure as of yet. It is not really looking like a proper diagonal in that sense, but yes, we can force a count if we really want to. But that's not what we are here to discuss. We are here to discuss proper invalidation level. At what point we can say that this wave 2 will, what do you call, be not a wave 2 and this will be considered as a correction in the other direction. So long story short is above the level of 1.08043. We can say that this market will invalidate the nested impulsive count to the downside. And at that point, we can say that this market is probably doing something else, right? So this is our invalidation for all the bearish counts we have currently. Right? If something new comes into play at that point, we can look at it at that point in time. Now, secondly, what would this market be doing if this market really does go higher than this level? So what I'm thinking is that the clear possibility which I can think of right now is that this market most likely in that case would be continuing as a sideways movement. That's the most likely scenario I can think of right now. Basically, what that means is a bigger time frame flat structure. So if this is the point of reference or the starting point of the count, then the flat structure should look like this. So this will be your A down, possibly going up for B. Should have drawn it outside this area. So this is exactly the kind of structure we are discussing right now. A here, B at the top or near the top, and then C down. So that basically suggests that this market can go much, much higher than the current level. And since we have already established the invalidation level, we will look at it if it is triggered. So this could be the B in that case, and this could be the C, right? So shorts are currently not completely relegated, but we do not seem to be having a proper trigger for that. So that's why I discussed both possibilities. And let me see if there is anything else to add here. Actually, the setup for shorts again still becomes active only below the red trend line. That is, once the price action is trading below this red trend line to the downside, only then we can expect this market to go on the downside, right? So that's about it for our quick discussion on Euro USD. Let me know, guys, if there's any questions or doubts on this counter before we move over to the next chart, which will be EURCAD. Thank you, Jill. And Fraser saying clear, still short on this, but stops in place. So we'll see. Okay, guys. So let's head over to our next chart, EURCAD. So EURCAD is basically moving along the lines of what we discussed in the last discussion. Those of you attending it for the first time or have missed intermediate webinars, the way we were thinking that this market is progressing was basically two particular ways. I think one hour will be better. One, we were thinking that this was the X, and in the triple zigzag we need to have a wave Z. So we were thinking either the wave Z is complete here. That was the first hypothesis. And the second hypothesis was if the wave Z is not complete here, then the market is still going up in for the wave Z completion. And in that case, it should head at least higher than the level of 1.47782. For that, we have placed an alert near this level of 1.47133, which is yet not triggered, right? So the idea is that if this market is still heading higher than above 1.47133, 47132, 133, roughly speaking around this region, we will be looking for possible long trades, right? That does not mean this alert once it's triggered we will look for long. Looking for means we'll reanalyze the chart and consider the situation at that point in time and think about taking the trades accordingly, right? The second possibility is that or the previous possibility which we discussed was that if the Z is complete, we are also not going to enter shorts right away. We have already placed an alert for it below 1.43385. So if the market goes below it, we will be looking to take the shorts below that level. So that's about it for our discussion on EURCAD. No real trade right now. It's just a wait and watch. But still, if you have any doubts, just let me know in the comments while I'll quickly load up the USDJPY chart. Where is it? Yeah, this is the one we are following. So USDJPY has not only gone down as expected, it has also achieved our expected target level. We were not expecting a very big target. It was a small target, but it was what it was. So if you are attending this webinar since the past 2 3 sessions, we have been tracking this trade, and the idea was that either the B was complete here or it's still continuing. But in both cases, we were expecting that the market will head lower, and we were expecting that it will touch at least this price level near the bottom part of this white support zone. So this price level is coming around what do you call 131.28. So this is exactly what we were hoping, and this has happened. So if any of you guys were actually taking the trade or following this and have taken the trade, please do let in the comment section so that other of our participants can know. Right. So with this, our current tally of number of trades comes out to 61 in the last 51 webinars. So 61 big moves we have captured in the last 51 webinars. And these are only the big moves, not the small moves, generally speaking, unless of course it was a move discussed right in the webinar for a very short term play and it played out. We generally do not consider much smaller moves. So that's about it for USDJPY. We discussed it. It has worked out. I'm not currently going to go long just now. We already have an alert placed at 134.97 something level, and definitely I'll have to bring it down. But firstly, I would like to check or not check. Firstly, I would like to see this market go above this CN color trend line, right? So that's basically our idea currently on this counter of USDJPY. It's a little bit of a wait and watch for possible longs, and the first sign of strength will come of this market breaking above the CN channel. That is price action doing something like this. So wait and watch for it. Let me know, guys, if there's any doubts or queries on this counter before we move over to the next chart, which will be our last Forex pair, EURJPY. All right, guys, thank you for the confirmation. Let's head over to our last chart. So EURJPY, we discussed last time that we were expecting a possible unclear structure here, right? There were two main possibilities we were discussing. Actually, they are represented by this CN arrow already. So what were those possibilities? The first one was that this was the 1 or A. Actually, we were more interested in what happened from this point. What we were thinking was that either this was the A, B, C complete here, and the market will head lower, right? That was one of the possibility which does not seem to have given us a very clear indication of the moment. Second, which was the more likely scenario, was that we were expecting that this ABC was just a three-way structure for a bigger degree flat. So that means basically it was something like this: A up, 3 down for B down, and 5 up for C up. So that basically means this whole move from here to here will be your A up, and this will be your B down, and then it should be followed by 5 waves up for C up. Now, in that what you call discussion, there were two possibilities again. The one was that B is already complete. The second one was that B can still continue lower. So we were not clear which one is it, which one was it following. So we have definitely represented both of them on the chart. What it looks to be like currently is that it is probably continuing for a WXYXZ formation. That basically means that this market can go very near to the last known low, which is around the price level of 137.368. Not only that, it is also possible that it goes near the low, breaks it for a while, and then pulls back in for that 5 leg up for the C. And after that, it falls. Right. So that's also one of the possibilities. Actually, this is the same thing we discussed last time. I don't really have much to add on it. No trades on it. Just a wait and watch. Best case scenario for us will be to plan shorts. But since, as I said, we do not have any confirmation for anything at all, it's just a wait and watch. Just keep this idea in mind of how we expect the market to move, or one of the ideas of how we expect this market to move, which we are thinking is the higher probability scenario at this point in time. Let me know if there is any doubts before we move over to our more interesting discussion of crude oil, which seems to be working well as per our analysis. Thank you, Fraser and Jill and Charles. So let's head over to our discussion of WTI crude oil or West Texas Intermediate crude oil. First of all, what we have here is impulse in the downward direction. We have already discussed it. If you still want to check the complete picture, just check 2 webinars or 3 webinars back. We have discussed this in quite a lot of detail, right? And last time when we were discussing, I was also telling you how I was able to capture this move. But when we did the webinar, it has already come to pass. We were somewhere here, I believe. So, anyways, long story short, what we expect is that this market still has more downside remaining. If this count is the correct count, then we have at least three. So, even if there is some mistake or some updation required on this count, we will have at least 1 to 2 legs in the downward direction. That's our current expectation before this market completes the triple zigzag to the downside, right? And more importantly, our targets, we have already discussed them in the last webinar, but just to quickly refresh the memories, we are expecting somewhere between 64 to 62 level as our targets, which are basically based on this support zone. So it has, I believe, already touched sort of 64, sort of it has touched the target. I wouldn't say exactly matched, but this is trading. So in real life, we don't actually care much about the targets. If you are short, then you can just manage your positions accordingly. No need to wait until what do you call every point touching the target or every contract touching your exact target. Basically, book partials, but you know what I mean. So, not discussing that too much. As far as my understanding is concerned, we can consider this as a target already achieved. But yes, I personally think more downside should be seen as per our short-term analysis, which I've already discussed. However, because we have already gone near our expected target, I'll just push it as our 60-second trade, which has worked out in the last 51 webinars. And yes, I believe some of you were already in this trade. Let us our viewers know by putting that in the comment section. And I believe some of you who generally attend the webinar are also missing. But anyways, we'll continue with our chart of gold. Let me know, guys, if you have any doubts or questions on this chart before we move ahead. That's good to know, Charles. And thank you, Fraser, for the confirmation. So let me quickly load up the gold chart here. Thank you, Jill and Philippe. Where is the updated count? I think this is the one. So yeah, gold, when we were discussing it last time, one second, let me go to a lower time frame and see. So there it is. So when we were discussing last time, we were of the view that because this market has taken out the high of the price level of 1958, it means, or it is suggesting that more upside can be seen on the counter, right? And we already discussed that in our nested formation, this was one. This could be the end of the two, or the two might still be continuing like a flat structure, right? These were the two outlooks, or the two main outlooks, I should say. One second. Okay. So as I was saying, these were the two main outlooks that we were thinking this market can show us, or can display in the price. Currently, this wave to completion here is still standing strong. It does look like we have a possible impulse heading in the upward direction. But then again, these things can be counted in multiple ways, right? So we do not have a proper confirmation, but what we can do here is very quickly do a rough analysis that can help us determine a few things. So if the market really does show a close below this level of 1933, then that is a show of weakness on this counter. And it is also a sign that possibly the corrective structure continuing to the sideways direction may be the structure that is possibly moving, right? So long story short is that since we have two possibilities here, that the two might still be continuing, or the two is already complete here, we do not have a clear evidence if the market will straight away shoot up, or it will first go down and shoot up, go down like this and shoot up. So to differentiate between two, we have this level of 1933. If the market really does close below it, then we will assume that this possibility is the one in play. If the market goes there and then reverses, or touches it and reverses, or give a spike and then reverses, then we will assume that this is the possibility in play, right? So that's about it for our discussion, or quick discussion on gold. But keep in mind, the more important factor here is the upcoming announcement by Fed, right? It is very near the corner, or whatever is the proper phase for it. And its impact will affect not only S&P, gold, euro, but a lot other currencies and indexes, and of course commodities. All right, guys, let me know if there is any doubt or query here. By the way, do keep in mind this can be counted as 3 here and 4 here and then 5 here. But it's only because of the strength of this move to the upside, I'm counting it the way I'm counting it. Thank you, Fraser, Philippe, and Jill. Hey guys, before we move ahead with our discussion of S&P's 500, there's a quick thing I like to bring your attention to. About 2-3 webinars ago, when we discussed that I'm looking to introduce a membership, I asked you guys if there are people who would be interested in joining in, and a lot of there were people saying yes, we are interested, but when we have actually released them, the number of participants are very low. As you can see already in the chat, the people who have joined in are given a diamond. So only one person who has joined in is currently in the chat, and the overall number is, I would say, not as supportive as I would like to see. So I personally do not believe that none of you can afford the petty fee it is, and I personally am not looking to push a membership. It does not give us any. It does not give me anything what you call sort of money wise much, but because it's work I'm doing, there should be a reward for it, or efforts must be reciprocated. So do keep in mind that you look forward to joining it, and we can only run this project for a few more webinars. If there is support, I'll look to continue it. Otherwise, as I've already mentioned, I'll move over to another project. So that's just a quick word I wanted to have with you guys. Let's now head over with our discussion of S&P. Yeah, Fraser, thank you for your comment. And of course, you are the first person who has joined in the services. Thank you for the real support here. So now let's head over to our discussion of S&P's 500. Currently, we are on the 1H chart. And one second. Yeah, so last time when we discussed, I had mentioned, I'm not sure how many scenarios we discussed. So I'll just quickly run down the bigger picture scenario that I have in mind. Now that's good to know, Philippe. Yeah, one second. So as I was saying, there were multiple scenarios. I'm not sure how many I've discussed, but the main theme was that if this market has given us a correction to the downside here, and this really is continuing as a triangle, then first of all, if this is the A of the triangle, this is the B, this is the C. First thing is that this has not achieved the targets for the D. Generally, the D wave will go at least around 3700 level, and we already know that D can go and touch the low of B as well. That's called a barrier triangle actually. So not only it has not given us the general targets, it does not even look like a completed wave D. So that basically means that more downside is still open for this counter, right? So now if the market is open for more downside, then it does not mean that this market will just straight out fall and give us our targets, right? So that's why we discussed two scenarios. First was that, let me see one thing very quickly. First was we were thinking that this A, B, C, and then D, this was a small d, smaller than our general targets, right? And this will give us spike up for the E and then fall. So that is still in play. If that is the count which is proceeding, then it will give us the spike up and then fall. Generally, wave E's are accompanied by a big news event, right? And giving a spike or a very fast move or a big wick or shadow or candle, whatever you would like to say, is a common characteristic trait of wave E's, right? So the incoming Fed news might be accompanied by it, but I've also seen that markets generally, when they are going to fall, they do not give very clear indications. So it is also possible that it may not, not give it, right? Anywho's, a long story short, our speculation currently of the direction depends on first that the D's target is not yet achieved. So either the D is continuing, and if not, if the D is already complete here, then the E most likely will give us a fast leg up or a sharp leg up, and then there will be a fall. That's for the bearish scenario, right? I personally do not know which of these two scenarios is following. or market is following. If the D is complete and E is going, but I personally think that the D continuation scenario is much more likely. And as per my bearish bias, there's the second scenario which is more likely, is that this was the whole thing was A up, B complete, and then C complete. Basically, what I'm saying is completion as a possible flat can also be. I know it's kind of a forced count here, but it can also be considered as a possible flat structure. And we know in flat structure, the C is not required to go higher than the wave A high, right? That's a well-known fact. Again, if this is the outlook this market is following, then it can also straight away fall. So that's why I have maintained the bias to bearish side. If the fall really does come, it should be much bigger than our expectation. Long story short, it should at least take the market lower than 3490 level, and much lower, of course. We do not need to calculate the targets as of yet. You will see that in the upcoming webinar. So the conclusion of this particular analysis is that bearish side is very much likely. And based on that, if you are looking for longs or any long opportunities on this counter, you definitely should consider taking smaller positions, not even stop loss, because in news events like these, stop losses are literally useless. I believe most of you are doing trading for quite some time. But if you are not, or if you are viewing these webinars for the first time, just keep in mind that stop losses can are not required to be respected. The market can gap up or gap down in a fast movement, and you will just think that you had a stop loss and you may have left the screen, but the loss will actually continue to increase until your accounts are completely depleted. That's just the kind of thing which happens in these news events. So small positions if you are long, and of course even in short, even if you're looking for shorting, the same thing applies. We are not 100% sure about the direction, so small positions and constant monitoring is required here. So with that, I will say that my bias remains bearish, and particularly more shorts should become active below actually 3808, but I have placed it below 3776. Right. So that's about it for our quick outlook on S&P's 500. Let me know if you guys have any doubts or queries in this counter. Thank you, Jill and Charles. Let's head over to our crypto girl. Just became a member. Hmm. Well, thank you for becoming a member. It's nice to know. Okay, so with that, let's now head over to our last two charts, which are basically Nifty and followed by BTC. Let me just quickly load them. So Nifty, as we had discussed last time, it is basically, thank you Fraser and Philippe for the confirmations. So Nifty, as I was saying, discussed last time, is basically doing nothing new. It is basically moving as we expected it to move. I basically propose that if the bearishness is to continue, then we are to assume that this is possibly doing something like this. If you are new to Elliott Wave, I'll just quickly point out that I'm talking about the simple impulsive structure to the downside. In an impulse, we will have 5 legs. And if we compare this rough structure to the actual chart, these are the 5 legs in play. The analysis suggested in the I suggested in the last webinar was that this was possibly the 4, soon to be followed by the 5th. Now see, it has gone down. It has gone lower than the wave 3 low of 16,852-ish level, but it has not gone lower much, 16,828, but technically it has completed the whole movement. So technically you can say that yes, this is the 5th complete. Right? But if the market is still bearish, then what is happening here is that this 4 is just extending itself in time. If that is the case, then this becomes a case of 3 up, 3 down, and then 5 up. So this is basically a flat structure. A up, B down, and C up. So in that case, more shorts should become active near the low, right? Near the low basically means 16,833. And if we look at this structure going to the upward direction, we will quickly note that it already has completed the minimum requirement: one up, two down, three up, four down, and five up, right? So long story short is that this market can see more downside, but from the conservative perspective, the minimum downside has already been completed, right? And since the minimum downside is already completed, new shorts either are going to be what you would call risky or based on your swing perspective, or you can just wait intraday and see how the market performs for taking new shorts. So that's my current perspective on Nifty. And just keep in mind, guys, I am net short on the indices, still holding shorts, and they are so far moving as expected. But I am expecting a bigger fall. So holding net shorts means holding overnight positions, and the reason for doing that is, as I've discussed much back in the on the Nifty chart when we were discussing it on the daily time frame, that when big moves happen, you can expect complete gap downs. So you may see a gap down of this much, right? And you will not get a chance to enter the short trade. So that's why I'm holding net shorts on the indexes. Of course, that also means that if I'm wrong, it can just go completely against me and I will not get a chance to exit overnight. But it is what it is, right? So very clear discussion on Nifty. And last point to add, if the bulls are really what do you call dominating here, then we will only be taking the situation to upside seriously above 17,100, right? Below that, everything is just pullback, giving us an opportunity for more sell off. With that, I would say we have discussed quite a lot of Nifty. And yes, if you are joining here just for the chart of Nifty, I'd like to let you know, guys, that I'm currently planning of starting a new project of basically Nifty and some NSE stocks, which will be covered much more regularly. So Nifty will eventually be taken out of these webinars. Currently, I do not have a set date, but I am thinking definitely in the first week of April or near the end of March, which is not far away. Anyways, so let me know what you think about this. You can just use the contact us page on the website, and that will be a separate project. Again, I'm thinking live streams, but we will see how to do. And in the meantime, if you want to contact me, you can just contact me using the contact us page here on the website 50s.com, and then on the top you can find the page. So that's about it for our discussion of Nifty. Let me know, guys, if you have any doubts, questions, or queries before we head over to our last chart of BTC. Thank you, Fraser, Philippe, and Charles. Let's head over to our last chart very quickly and see. I remember BTC is actually there. It is. So BTC is basically still heading to the upward direction, right? The only thing to keep in mind is that if it really is a strong impulse, then the wave three generally we expect it to be bigger than the wave one, right? If it is not really what do you call a clear impulse and the market is looking for more bearishness, then the expected progression would generally be a diagonal, right? So if this is an impulse, it should look something like this, right? It should take out, we already have proposed targets. It should take out the 35,460 target to the upside with ease. However, if the market is overall bearish, then the way this market will proceed will look something like this. Overlapping structure and then a possible wedge formation in price action terminologies. Right. Currently, we do not have any clear indication of which of these structures is this market following. Okay. And currently, it does look like it has, even if it gives a pullback, still one leg up remaining. So currently, Yes, those who are holding longs, because do keep in mind when we were discussing this chart last time, we had taken long trading opportunities or discussed long trading opportunities above 24,850 level. So longs are already triggered. If you are following me, then you must already be in it. And based on the position you are in, you should be able to trail it. Cannot advise you on that because I do not know what positions you are in or what entry price you have. Right. With that, I would say that we have discussed all of the charts. And if you have any doubts on BTC, you can of course let me know in the comment section. Do make sure to hit the like button. Right. Many of you guys attend the webinar and forget to hit the like button near the end. So make sure you take a moment here before leaving and hit the like button. And of course, make sure you share the content with your friends and colleagues. And lastly, if you are finding it of use or benefit, then do support the channel to ensure that these webinars keep coming in to you in the future by joining our membership, which is recently launched using the join button on the YouTube channel. That's about it from me, guys. I'll see you in the next one. You're welcome, Jill and Fraser and Charles. I'll talk to you guys soon.